Hello and welcome to Pro Trader Strategies Market Commentary for Monday, June the 25th. My name is Eric Wilkinson. Yes, on location. We're going to be doing this this week as I'm traveling, so a little bit more lackadaisical, I guess, if you will, in the attire. But let's talk about the overall markets and the equities. Equities aren't doing too well. It's not really based on any economic data that we got necessarily, because the economic data we get on Mondays usually isn't that good, but we did get new home sales coming in at 289,000 units sold, expected to be 265,000 units sold, so better than expected there. But we did see revisions to last month's number where they lowered those by about 24,000, which makes it a complete wash for this number here. We'll see on the equities. It looks like we got a little bit of a blip on that headline number, but I think once people started digging into those previous numbers and the revisions, things of that nature, we're starting to see a little bit more of that bearishness come back into the market as of late. But let's talk about the overall markets. We've got crude oil. We think with the equities coming off, we would see a little bit of flight to safety with some of these commodities. We're not necessarily seeing that in crude oil and in gold, especially with some of the demand we've seen in crude oil. We would think that would give us a little bit of a catalyst to move higher, which we saw on Friday. We're not seeing that follow through today. It came up and touched the Fibonacci level that we talked about, that 50 Fibonacci level. It's going to act as resistance, especially now that it's lined up with the trend channel that I have set up here. I think it's going to want to get back in there and continue this upward move, especially with the with the overall economic picture looking pretty decent here in the United States. So a little surprised today, especially with the NASDAQ and the Dow Jones down as much as they are. I would think that there would be some push here and in gold, but we're not even seeing that push in gold. It's below 1,300, below the point of control, which is right there at the 1280 mark. That's where I think that gold would want to settle down, especially with the turmoil we're seeing in the overall equities today, but it's just not getting the legs right now. So gold is slightly in negative territory, but trying to be supported by this value area low. That's where it's going to start thinning out on volume, because people are going to want it to go a little bit higher to get back to where that comfort zone is, if you will. All right, Bitcoin is in positive territory nicely. I still thought it needs to go down and test that 5880. We were pretty close earlier on today and on Friday. I thought Friday might even happen today, a little push to the downside, create that little base. Double bottom would really look good for the bulls, or if you're bullish in Bitcoin. But right now it's just kind of trudging along. One could call it that we are very close to a double bottom, and if we start resuming to the upside, they could call this a tweezer bottom, despite the fact that it came a couple hundred points shy of that actual tweezer bottom there. It's pretty close for hand grenades. All right, anyway, bonds are trying to move higher, but they don't have a whole lot of room to move higher, folks, because the reason why is the Fed is on this mandate of raising interest rates. So if the bonds start rallying, that indicates lower interest rates. We're not going to necessarily see lower interest rates anytime soon. The Fed is going to continue their mandate of raising interest rates, so bonds just don't have the room to move to the upside. All right, so they're trying. It's a flight to safety because of what we're seeing over in the equities, but there's just not going to be a whole lot of room to the upside for bonds. All right, Dow Jones Industrial Average down quite a bit right now, very close to the lows of the day. Once we've gotten past this point of control where the most time and volume has been spent, that's going to start extending these losses. The further away we get from that, you're going to start losing participation and maybe even people looking to get out. So that being said, we're below the 200-day moving average. A lot of people will be looking at that for support, because the next support is quite a ways down. It's almost all the way down to the 2340 area, 23400 area. So that's going to be about where our next support starts coming into play, especially now that we're below the 200-day moving average. A nice big rally at the end of the day and only finish down maybe 100 to 50 points. That would make this look like a very nice bottom with a doji. We'd be above that 200-day moving average. That being said, doji added into that would look very nice for the equities. Don't know if we're going to get that today because of such light volume going on right now and not a whole lot of economic data that really is going to push this market higher. We could see this just continue to kind of come off for the rest of the day. This is the NASDAQ down, not as much in point terms as the the Dow Jones Industrial Average that we just saw, but as in percentage terms, you can see down over 2% here in the NASDAQ, and over 160 points to the downside, very close to the lows of the day. Looks like the target is going to be right around that 68.18, or sorry, not 68.18, 7,061 area. So a couple of hundred more points down to get to, maybe you can call it just 7,000 right here to find that 38 Fibonacci level. So that is a nice psychological number. People like the rounded off numbers for that psychological support and resistance, but that also lining up with the 38 Fibonacci extension will act as a dually support level. All right, but NASDAQ definitely leading the way, and the tech sector getting beat up right now. Now we've got the E-mini S&Ps trying to build a bottom here. You know, we weren't seeing a whole lot of any upside action today other than right off of that economic data point, but like I mentioned, once we started digging into those numbers, it really started coming off again. Finding some support though right now in this bar. It was looking pretty bearish all the way up until right now, where we're starting to see that support happen. Okay, let's talk about some things that I've done. I'm watching MGM. I have a trade on in there that I haven't covered. I'm long some 30 puts. Obviously, those are gone into the money. I'm going to milk this out because this sector in general and the overall broader market's pushing lower. I'm going to let some of these go out, but stay diligent with a few of them, and got out right around my targets for trades here. So let's look at Macy's. Played this to the downside. If you remember, this was when we were getting a sector rotation. We were pulling out of tech and putting it into the retail sector. Retail sector did very well for a short period of time there, and that's why we got into this. Is for that rotation back out when that happened. So I went in and did the August, and I bought the 36 puts in there for, what was it, originally $1.20. So my mandate would be a 50% increase. So we're talking about $1.80 to get out. Well, today came in today and it was trading around $2. So I got out at $2.02 on my Macy's trade. So nice little move, directional move, had volatility expanding for me. So when you're buying options, we talk about that. You buy them when low, that increases your probability when it starts moving higher. That both of those aspects work for me. Directional move, volatility, as you can see right down here, increased after I started putting on that trade, set it up. You know, one of the things we talk about is you can only really control the setup, and if you can control the setup, you can increase your probabilities at that time, and that's what I did to set myself up for success with Macy's. Now, similar situation with the other trade that I played today, got out of, was Caterpillar. If you remember Caterpillar, it actually had high implied volatility that I was trying to take advantage of. So I was selling strategies both in my IRA. As a matter of fact, the Macy's trade was in my IRA as well. I took both of those off IRA and margin account. But over in my IRA with this trade, I'm trying to create a synthetic naked short call situation. So in that, I had to buy something really high up in my IRA just to define that risk, just to meet the rules of the regulators. So in Caterpillar, I went in and did the July, and I sold the 150 calls in there, and then defined the risk in my IRA by buying the 172.5 calls in there. Originally sold this strategy for 72 cents. All I bought back was my short option in my IRA, and obviously in my margin account, because that's all I had in my margin account over there. But in those 150 calls, I bought them back for 20 cents. Left on the 172.5 calls that's in my IRA right now, because there's no sense in taking those off for a penny. Just took off the short 150 calls in both my IRA and my margin account for a nice little profit there. Again, another situation where on Friday it was a toss-up whether or not I was going to be right there at my 50% increase on the Macy's trade and the Caterpillar trade, a 50% decrease to 35 cents. But today, with the market move and directional move for Caterpillar, volatility and a lot of things working in my favor with the Macy's trade, was able to get out of those for profits today. That's all I got for you guys today. I hope you guys checked out last Thursday's webinar. It was on the straddle. Great strategy for high implied volatility, very high probability of success strategy, despite the fact that it does seem a little scary that it's that risky, you know, too undefined option shorts. That does seem a little scary, but we collect such a big credit that our break evens are very far away. So we can take advantage of that in the straddle. Strangle is going to be a similar situation where we can take advantage of high implied volatility. This is a higher probability strategy. We're going to have to accept a little bit less credit because of those higher probabilities. But I'm going to show you how to play around with that strategy and how you can be mechanical with it to increase your probabilities of success on Thursday. So check it out. Go to protraderstrategies.com. That's all I got for you today. Other than if you can't take that, take it easy.